Welcome to the Crypto Nest. Okay, so for Bitcoin, well, we had a dramatic weekend and price plunge. For once, luckily, the stock market, they were closed. Also, we closed the CME gap on Friday. So I think that I need to check, honestly, what's the ratio that Bitcoin always go back and close the CME gaps. I think it's 95% or something like that. Anyway, it's into the 90s that I heard. I will ask AI eventually to help me out and do the maths, or do the maths for me. Okay, so we had this scenario that we had an A, a B, and actually a W, X, Y to be more, I think it would stick more. And within this Y, we had an A, B, and now we have the C. So I can remove, redirect that one. Now, there are two possibilities. Either the correction is finished because once again, we have an A, a B, and within this C wave, I can also count an A, a B, and a C. So that's done. The thing that is not, okay, let me continue for the things that are done. So we did reach a little bit below the 1-to-1 ratio, wave A, wave C. So it was here, 112,592. We went as low as 111,969. And this was the previous higher high in, what was that, May 2025. So on top of that, coincide also with the MA50. So we had, and then we had a resistance here that flipped support as well. So we had a lot of indicators, a lot of levels that help the price to be steady at that level. Now, if I do some micro counting, I go on the 1 hour maybe, and I check into this C wave, I count this as an A, a B, and a C for the wave 1. And this is the wave 2. We have another A, B, C for the third wave. But now, this is the thing. I feel that this is viable. And this could be the fourth, and we are reacting at that level, and we could make another, fifth wave. But also, couldn't I say that this was the A, B, C for the third wave? This is the fourth. And here we have a very ugly A, B, C for the fifth wave. So it depends how you count it. Which one is the better? I honestly don't know. But once again, when we go to start to micro counting and structure, it's not very relevant. I would say let's stick with the Fibonacci retracements. You can see that now price, it's kind of reacting. It just now reacting to this, I made this down trying to see maybe, this wave 2 could be that's already finished. This would be so disappointing, honestly. Because I can also say that, okay, I will not do the micro counting because it's going to be very ugly. Maybe I want 2 here, and then this is the third, the fourth, and the fifth. And it would make sense to have an A, a B, and a C. But now, if this was it, wow, that would be something. So let's see. But I am expecting a lower price. And if I count this as a wave 1, we must have a wave 2 pullback. How deep? Well, that's not easy to see, but we have an ABC, so technically I could count, and just bear in mind this is 15 minutes chart, okay? So we have an A, a B, and a C. Almost, is it overshooting wave B? No, but it's a high B wave, and now we could make the C wave. So let me go and let me enlarge a little bit. So we're talking about the following levels: 114.44. I'm sorry. 113.838, 113.730, 113.505. These are the levels that the C wave could possibly find home. And the 1.236, 113.838 coincide with the 0.382, 113.811. So that would be a nice one. Nice comfort zone. So yeah, that's pretty much I wanted to say about Bitcoin. I want to go back on the 4 hours just for a last thing to share. You remember yesterday or 2 days ago when I shared my trades, I said I just opened a leverage. I don't know why I did that, because I shouldn't have done that on Bitcoin. I should have done that on Ethereum, because Ethereum has a way bigger, like stronger chart. And in fact, I would have double my my gain if would have opened the leverage on Bitcoin on Ethereum. But I'm still happy. I'm not regretting, but not optimal, let's say. And why did I start a leverage? Well, because it's not often that happens that Bitcoin is oversold on the 4 hours. Last time it did that, it was here. So this was 22nd of June. And yeah, look what happened here, right? And we went higher. So it did happen also here. So this is why I was, I found this a good timing to do a leverage. I don't do leverage often, so I make it count when and only when I find probabilities are very high that we're going to go to the higher level. I did fear taking some profits here, but I think I'm going to let it ride a little bit. And I wanna have the ride for this potential third wave. Now I don't have a target yet, because the second wave, I don't have any hint that this second wave is finished. Actually, I don't even know if it started. I think it started, but I need to wait more and see. And then definitely when I see reaction, if I see a reaction, if there is a reaction, actually, if the market make it happen that we have a reaction here and actually materialize a 1-2 setting, then I'm going to estimate my my exit within the third wave. I honestly could leave it for the fourth and fifth, but let's remember, maybe we're not going to have a 4 and 5th. Maybe it's just an A, a B, and a C. And that's the tricky part, right? So it's greediness. And I start to be good with my greediness. I kind of control it. And eventually I will master it. Not far from mastering it, I believe. And also, if it goes lower, then I'm going to get out. Because if it goes below the 0.786, then I'm going to lose, I don't know, I don't think I'll even lose 1%. It's less than that. So I really jump in at, honestly, perfect timing. Alright, so hopefully you enjoyed the video. Please like, subscribe, and hit the notification bell. And have a good day. Bye.